with David Blain, a discussion about your money, including everything from investing and taxes to real estate. Now with this week's program from Blain Company in New Bern, here's David Blain.
Hello and welcome to All Things Money. I'm David Blain. For the next 30 minutes, we're going to take a look at things having to do with finance. We'll talk a little bit about investing. In today's show, we'll talk a little bit about the real estate market. Occasionally, we'll talk about your tax picture as well. Remember, the show is about you and your money, so if you have any questions or comments, feel free to send us an email at allthingsmoney@dlblain.com. That's allthingsmoney@dlblain.com. Our phone number is 252-633-0107. Feel free to visit us on the web at www.dlblain.com. There you'll find some information on myself and my company, as well as archived copies of the show. If you want to go back and listen to a segment that you missed, or maybe you're driving in your car and you can't listen to the whole show, after about a week or so, we post all the old shows on the internet. You can download them and listen to them at your leisure. We've got another great show planned for this evening or this morning, depending on when you're listening to this. We're going to be talking a little bit about some of the issues that are going on in the finance world today. I get a lot of questions about, what do you think about the government stimulus? What do you think about health care? What do you think about housing? And so today we're going to take a little bit of time and run through some of these issues, and I'll give you some of my opinion on them. We'll mix in some opinions of some other people. Some of the facts and figures that I'm referring to, a colleague of mine, Stephen Romick at the FPA Funds, recently did an interview where he gave out some great statistics, and so we'll be using some of those as reference as we move forward. So the first thing we want to talk about is the stock market, it appears, is in what we would call a V-shaped recovery, meaning you had a fairly significant decline, and it seems to be recovering rather nicely. The month of September so far has proven very resilient. The economy, however, is a different question, and we don't see the economy recovering at the pace that, frankly, most people would like to see. It's more of what we call a square root recovery, meaning that you have a sharp decline in the gross domestic product followed by a short, sharp recovery and then a flattening out, rather than a nice V-shaped recovery that goes back to where you were before the recession. One of the big things that everyone is aware of that happened during this latest Great Recession is the unprecedented involvement of the federal government. They have essentially transferred private liabilities to the public sector, become a giant liquidity machine, the lender of last result, guarantor of mortgages, provider of jobs. They're purchasing mortgage-backed securities, purchasing of asset-backed securities, and a guarantor of transfer payments, tax credits, tax cuts. And so what happens next? This incredible government involvement in every area of the economy. Well, in a perfect world, this would gradually recede and the private sector would take over. Frankly, I believe that's almost impossible, simply due to the massive scale at which the government has injected itself into the economy. A couple of things. The amount of debt owned by foreigners of the United States has increased rapidly. A lot of our debt is foreign owned. Here's a great statistic that we look at. 48% of the U.S. debt outstanding matures in the next 2 years. What does that mean? It means that between today and 2 years from now, almost half of all the debt that the United States has outstanding will have to be refinanced. This is in addition, and by the way, that amount is roughly $4 trillion. So roughly $4 trillion in the next 2 years is going to have to be refinanced. And this is in addition to the approximately $7 trillion another $3 trillion plus of deficit spending that is going on. So we're looking at another $7 trillion over the next 2 years is going to have to be sold to someone to keep the United States moving ahead. This is a tremendous amount of debt. It gives me a lot of pause, and hopefully it gives you out there a lot of pause that this is just not sustainable. If interest rates go up over the next few years, it will cause the U.S., when they go to refinance this debt, to pay higher interest rates. One of the reasons that the huge debt burden is somewhat under control at this point is that interest rates are so low. If interest rates begin to tick up, this problem of the debt is going to become a very, very large problem very quick. The other thing that we look at is what we call unfunded liabilities or off-balance sheet liabilities. You may have heard Enron and AIG and Lehman Brothers and all these corporations. Part of the problems that they ran into is what we call unfunded or off-balance sheet liabilities, and it means liabilities that the company essentially has promised to someone but that aren't really reflected on their financial statements. Well, governments have the same problem. The promised health care benefits, the promised Social Security benefits, promised retiree benefits are what we call off-balance sheet liabilities. According to the GAO, which is the government's accounting office, the estimate of unfunded liabilities for the federal government is $107 trillion. That's not something that myself or Wall Street or anyone has made up. That's our own government accounting office, $107 trillion. If you divide that by the population of America, it comes out to about $900,000 per household is what that number is. That's kind of a daunting number. I don't know that we're going to be able to pay that back anytime soon. When you look at the composition of federal spending, in May 1968, 46% of spending was on defense. That's gone down to 21% as of 2008. Some of the other things, Medicare and Medicaid are 20% of spending. Social Security is 21%. And interest is 8%. So if you take Medicare, Medicaid, Social Security, and interest, that adds up to 49% of the entire federal budget is in those line items. You look at defense, as I mentioned, is 21%. So the entire rest of the federal government operates on 29% of the budget. Well, that's all the time we have for this segment. We'll continue this topic when we come back after the break. For All Things Money, I'm David Blain.